If I was new, this is definitely one of the videos that I will watch because I'm going to talk about something that's going to help you in your trading career, especially in the beginning, because if you get this wrong, guys, it's going to be very hard for you to trade at the high level. Now, today we're going to talk about the math part of trading. Now, when it comes to trading, especially price action trading, there are 4 parts. The first part is technicals, right? Understanding the technicals, understanding patterns, market structure, reversals, understanding the context of the market, understanding, volume levels, supply and demand, support and resistance, maybe level 2, volume profile, things like that. The technicals, right? Now, the next part is the math part of trading. Right? And that is risk management, risk to reward, and win rate. That's the math part of trading. And this is the part that we're actually going to talk about today. And the other part is psychology. And the next part is the developing part, is where you develop to actually become a good trader, develop your habits. You do that by back testing. You do that by, writing in your journal. You do that by practicing every single day, taking screenshots, just working on your craft, right? You're developing your skills. You're trying to be a better trader, right? So those are the 4 parts of trading. And today we're going to talk about the math part because a lot of people really don't talk about this part that much. So today I'm going to talk about it. Now, let's first start with risk to reward, okay? Because a lot of people talk about this, but I believe there are a lot of myths when it comes to this, right? Some people say, I won't take a trade unless it's a 1, 2, 3, meaning that they're risking $100 to make $300, right? So if they don't see that they can't make $300 on that trade, they won't take the trade at all. And honestly, if you are a new trader, that literally sounds good because you're looking at the math and it's like, oh yeah. I can make, 3 times my money risking only $100. Yes, that's sign me up, right? And I get it. It sounds good, but let me explain how trading really works. Every risk to reward has their pros and cons. Okay, so it usually goes like this. The higher the risk to reward, the lower the win rate. Okay, let me say that again. The higher the risk reward, the lower the win rate. So that means that if I want a 1 to 5, meaning that I'm risking $100 and I want to make $500, then most likely my win rate is going to suffer. Meaning I'm not going to have a high win rate because I'm looking for a bigger reward. The market in general doesn't give you these big rewards every single day. Okay, it's not designed for that. If it was that easy, guess what? I mean, everybody would just be trading and looking for, a 1 to 10 or a 1 to 20, right? So the market is not really designed to give you these big rewards every single day when you are trading. So you have to understand that. Now, when you go for a lower risk to reward, actually your win rate goes up. And we're going to talk about win rate later. Now, I want you guys to understand that because some of you guys might, say, oh yeah, I want that risk reward. But let me ask you this. Can you handle losing 7 out of 10 trades in order to get that 1 to 5 risk to reward, right? Yes, you are winning 5 times. Yes, you are getting 5 times your risk, but still, you might have to lose maybe 6 times out of 10 or 7 times out of 10, meaning you might have a 30% win rate or 40% win rate in order to get that 5x reward. So you have to understand where you want to be, what type of trader you want to be, which type of risk to reward you want to have, because that stuff matters because it's based on your personality, right? Some people are okay with that and some people are not okay with that. Now, from my years of trading, I've been trading, going on 17 years, right? Pretty much, I realized that risk to reward doesn't matter. In the beginning, yes, I thought it mattered, okay? I always try to go for those big rewards, those big home runs. And honestly, naturally, especially if you have a small account, that's what you want. You want those big home runs. But I realized that risk to reward doesn't matter. It's all about the math, right? If you have a high win rate, it doesn't matter if your risk to reward is small, okay? And again, a lot of people might argue with me in the comment section or might disagree with me, but trust me on this, right? If you have an edge and you are winning more than you are losing, okay, you can still go for your quick 1-to-1s. And sometimes you have some people that will actually have a negative risk to reward. A negative risk reward is basically you are risking, let's say, $100 to make $50. So it's negative, okay? So if you lose 2 times in a row, that means you have to actually win 4 times to make back that money. But here's the thing. Usually when people have a negative risk to reward, their win rate is so high. So you have to understand trading is all about blocks of trades. And this is where a lot of retail traders or new traders in general have a hard time understanding this. So let's say on average, every 10 trades, you are winning 80% of the time or 90% of the time. So let's say you actually win 80% of the time. So if you have a negative risk reward, that's crazy. I'll never do that, right? And I understand, you don't have to do that. Again, it goes back to what fits you. Most of my trades are one-to-one. I scalp it, boom. But some trades I do hold, okay? Because I understand the context. So let me give you a good example. Let's say that if the market is reversing, I'm probably going to look for a little bit more reward, right? So instead of go for a quick one-to-one, I might go for a 3-to-1 or 4-to-1 or 5-to-1. Or depends. It depends on if I'm using a trailing stop, right? Then whenever I get knocked out of the trade, I'm done, okay? So yes, I do have my big winners, but that one-to-one is actually a nice sweet spot. Sometimes a 1.5, okay, is actually a good sweet spot. But I like my one-to-ones. Quick, boom, I'm out. And again, once you understand the market, you can definitely increase your win rate. Again, it goes back to win rate, right? The bigger the reward, usually your win rate drops. The lower your reward, usually your win rate goes up, okay? And we're gonna talk about win rate later. So that's how I'm looking at the market. For beginners, I suggest you try going for a one-to-one first, right? Just to get your feet wet. Because what's going to happen is your one-to-one is going to help you gain confidence. It's going to help you say, all right, boom, I'm in the market. I'm making money. I'm making money here and there. I'm actually making probably more than I'm doing. Because here's the thing. A lot of people say, oh, I would never take a trade unless it's 1 to 3. But a lot of those trades are still not profitable, right? So a lot of them think that since they are looking for a bigger reward, they are automatically going to be profitable. But guys, I've been doing this for a long time. I noticed that it doesn't matter what risk reward you have, you can still lose, right? So I noticed that a lot of people that claim that they go for 3-to-1, they still are not profitable. So it doesn't matter about your RR. A lot of people will say your RR is the most important thing. No, it's not, guys. Again, some people will argue with me. Fine, whatever you believe in, but I'm telling you right now, this is why I created this video, to talk about the math part of trading, because a lot of people don't talk about this, right? So when you actually get at this, you can actually do something. What I do is I do context risk to reward, meaning that whatever the context is, this is how I'm actually going to approach the market. If the market is slow, sluggish, quick scalp. If the market is trending or breaking out, maybe I'll hold for a bigger target, right? Or if the market is reversing, maybe I'll hold for a bigger target. That's how I do it. Again, you don't have to follow me. And again, it's based on context. It could be like if you're trading stocks and if your market has a nice, news behind the stock, maybe you actually want to hold a little bit more. Okay, so everything is based on context. That's the way I like to trade. So that's how I'm doing my risk rewards. So let's talk about the next part when it comes to math, right? Which is risk management. Now, risk management is all about how much you're risking per trade. Usually people will tell you, hey man, risk 1% of your account or 2% of your account. I remember thinking about that, but I never actually followed that rule, because when I started trading, I didn't start with a lot of money. So 1%, would probably be $1, right? I'm risking $1. So the best thing I can tell you guys is risk as small as possible, because 1% of your account could actually be 1,000, especially if you have a 100K account, right? So as a new trader, do you really want to risk 1%? Do you really want to risk 1,000 per trade and you are new to the game? No. So that 1% rule is kind of, to me, it never really made sense. The way I look at it is risk as small as possible per trade. And that's what you want to stick with, right? Because in the beginning, you will make mistakes. You don't want to make large mistakes. The next thing when it comes to risk management is you have to have a daily loss limit, okay? This will help you with blowing your trading account, because with risk management, guys, we want to save our capital, right? And one way to save our capital is having a stop loss, right? And then having a daily stop loss, because our capital, our cash, the money that we have, guys, is our soldiers, right? So imagine you're going to war every single day. If you lose all your soldiers, you're going to lose the war. So same thing with trading, guys. If you lose all your money, you're not going to trade. You're not going to have money to trade with, right? So we have to basically protect our cash, protect our soldiers. The way we do that, guys, is we have to have a daily loss limit. So we only want to lose a certain amount per day, right? So let's say the max is $300 a day. Boom, you shut it off. You're done for the day, right? There are some brokers that will have an option where you can say, listen, when I'm down a certain amount, close me out of my account and don't let me trade at all. Some brokers have that, some brokers don't, but please have a daily loss limit, right? And know how much you want to risk per trade, because you don't want to be sloppy with your trading. One time you're risking $100 on this trade, the next time you're risking, $500 on this trade. Okay, you don't want to do that, especially if you're new. The only time you probably want to do that if you have more experience and You say, okay, this is an A+ trade, boom, let me risk a little bit more, but that's not really for new traders, okay? You really want to risk the same amount per trade every single trade, right? Now let's talk about the last one when it comes to math is win rate, okay? Again, to really understand win rate, you have to understand trading in blocks, right? Trading is not about one trade, it's about a block of trades. So a lot of people would get sucked into, oh, wow, I can, risk $100 to make $500. Yeah, I want that win rate, but they don't understand what's attached to that. Okay, we talked about that earlier. Your win rate will drop. Okay, you might have a 40% win rate or a 30% win rate, and there's nothing wrong with that. If you really want to have a 5x reward, there's nothing wrong with having a 30% win rate, 40% win rate. Whatever fits you, you go with that. But I'm telling you that usually when you decrease your reward, you increase your win rate. Okay, so if you have a 1 to 2 risk reward, you only need to win 50% of the time, right? And you're good. So a 1-to-1, okay, is really good, especially if you know what you are doing, okay? Usually, from my experience, people that don't have enough experience in the market, they go for the higher risk to reward because it lacks up for, maybe the experience. And there's nothing wrong with that, okay? But once you really understand the market, going for quick 1-to-1s, honestly, there's nothing wrong with that. Don't let anybody pick on you or make fun of you if you only go for quick 1-to-1, okay? Now, again, you should have trades where you do allow your trade to go up or go more than a 1-to-1, but if majority of your trades are 1-to-1, so be it. So let's talk about how you can actually increase your win rate, okay? Number one, you can increase your win rate by tracking, right? Tracking your trades. When you track your trades, you're gonna find out, okay, this is a high quality trade. And once you find out your high quality trades, you can literally just only focus on your high quality trades. That alone will help you increase your win rate. Another thing will help you increase your win rate is maybe not going for these big hole runs, because every time you get out break even or they stopping you out because you're trying to go for a 1-to-20 or a 1-to-5 or whatever the case is. So you can actually increase your win rate by decreasing your RR. Okay, so maybe going for 1-to-2, or maybe going for a 1-to-1 for now, or maybe going for just a 1.5, so that will help you increase your win rate. Another thing will help you increase your win rate is experience. It's just what it is. The more experience that you have, guys, the more you will increase your win rate. So I wanted to make this video because a lot of people don't talk about the math part of trading too much. There's a lot of myths around this subject, and I just want you to understand that it's literally just math. Okay, I don't want you really to get caught up with RR too much and thinking that the RR is literally your strategy. Don't, because if you think that RR is going to save you, it's not. Okay, because there are a lot of people that have big RRs, meaning risk to rewards, and they still are unprofitable. So please understand that RR is not going to save you, and I want you to figure out what you are comfortable with, okay? Because just because this trader is trading this way doesn't mean that you have to trade that way. So this is a very good video of trying to figure out, okay, maybe I should check out, going for a 1-to-1, or maybe I should check out going for a 1-to-2, right? Instead of going for these big home runs. Maybe I do want to go for the big home runs. So this video is to make you think, right? To make you really understand what the math part of trading is about, and to make you grow as a trader. So that's all I have for you guys. If you enjoyed this video, hit that like button, hit that subscribe button. Also comment below if you have any questions, because I try to answer all your guys' questions. If you want to learn how I trade, go below in the description. I'll talk to you guys later, and please have a great day.